Welcome back. I'm Pratap here. Today is 20th December 2023. So it is a very important session because I'm going to explain some of the mistakes we are making while using high liquidity zones. And also the analysis part is also very important. Today all the trades are executed. All the zones are executed, but only one zone is successful and remaining all are stopped out. And except one remaining all, we are able to identify how those zones are going to be violated. That means one stock is stopped out. So let us discuss all those scenarios. In case if you are attending this video first time at our channel, please understand we are providing free training on supply demand zone price action course. So you can access this course and all the training videos from the playlist Supply Demand Zone Price Action course. In this playlist, all the videos are available starting from lesson 1.1 until the most recent lesson. Even the upcoming lessons also will be placed under this playlist. The link to this playlist is available in this YouTube video description. By clicking the link, you can access this playlist, or all these video links are available at our Telegram channel. You can also access from there. The Telegram channel link is also available in this video description. Now let us get into our discussion. So before we look into the high liquidity zone issues, first let us look into Nifty. There is something interesting happened on daily chart. We all know Nifty is at all-time high. Even today, the prices reached the all-time high. And after that, a supply zone is created. We have a leg-in candle because there is a gap. If you add the hidden body, this entire candle is a leg candle. So we have a leg-in, we have two base candles, and today we have a drop candle on the daily time frame. So we can draw a daily supply zone. Let me change the color to daily supply zone. But remember, this is a newly created supply zone. This zone is not having any achievement so far. When the supply zone gets the achievement, it's the immediately available demand zone, the one we have already marked. If this is violated, then the supply zone gets the zone achievement. Those zones having the achievement are tradable zones. We all know that. But look into this demand zone. This demand zone is also a all-time high demand zone, just before the creation of the supply zone. Because it is an all-time high demand zone before the supply zone creation, so obviously this zone is not having any achievement. Without zone achievement, we may not be knowing the power of this zone. That means one of these zones should get the achievement. And this demand zone might get achievement if the supply zone is violated, or this supply zone gets the achievement if this demand zone is violated. In case if prices enter into this zone, you can't take trades at the all-time high zone. All-time high zone only high T trades, that is hourly income trades. That means your intraday trades only allowed at all-time high demand zones when prices are entering into that. The reason is they didn't have a zone achievement. So that is the reason why. Or any lower time frame zones are there. And if any of the lower time frame supply zones are violated, probably the lower time frame demand zones get some achievement. So based on that, you have to plan your trades. But on daily time frame, none of these zones, that is this demand zone and supply zone, are yet to get the zone achievement. That is the point you should not forget. But the another point we have to observe, this demand zone got daily EMA confluence. Already prices are overextended before today's candle. Now, and this point we discussed, I think 1 or 2 days back. Now prices are entering into this. The moment prices enter into this demand zone, the overextension will be completed. But what is the power of this demand zone? We never know unless it gets the achievement. If the power is more, again prices will move up. Probably if the supply zone is violated, this demand zone gets this zone achievement, and this is going to be a powerful demand zone. But if this supply zone is able to break this demand zone, this supply zone gets some special power, super power it will get. The high liquidity zone power it will get. So next time again prices after violating this, next time when prices reach, definitely this is going to be a successful zone. Definitely means the chances at least 80% chances, because the high liquidity zones are having 80% success rate. But this is going to be a counter trend trade, high liquidity supply zone, if this demand zone is violated. You have to remember that point. Okay, this is about a brief analysis about Nifty 50 based on the current action. Okay, now the important point I have to discuss about high liquidity zones. Just I came to know, maybe I would not say everybody, but some of you are not having complete clarity on the usage of high liquidity zones. Certain points you should not ignore when you are dealing with high liquidity zone. Even yesterday also I clearly explained when we are discussing about the stock Astral. By looking the question forwarded by one of our members who is supporting me for the promotion of this NeoStock group, they got a question from one of our subscribers. They received a question, and that surprised me, that question. So one of our subscribers expectation is Astral we can take a trade today. Yesterday clearly told we should not take trade on Astral. The reason why I surprised, maybe you are not completely listening my analysis video. Maybe you might be listening few points and maybe you are ignoring few points. When it happens, whether you don't concentrate properly or maybe you skip the video, some parts of the video you skip, and if you listen few points and if you ignore few points, obviously what happens? You will take wrong trades. Please go to the yesterday's video. Yesterday's video means the video before this video, whatever currently I am recording, before that video, whatever I published yesterday, go to that video and listen at the timestamp 10 minutes 17 seconds. In our previous video, 10 minutes 17 seconds timestamp. You please listen the video. Clearly I told Astral. What is it I told? You should not take trade in Astral. I told the reason. The reason is Astral is, the prices are closed inside the demand zone of the Astral. When prices are closed inside the high liquidity zone, we should not take the trades. What is the mistake you are doing? You have to look for the stocks near the demand and supply zone, the most recent. Whatever the zones I am publishing in today's report, those stocks only you should remember in your tomorrow's trade. You should not take yesterday's near demand and supply zone or day before yesterday's near demand and supply zone. You don't have the knowledge when you have to take earlier days stocks near demand and supply zone. I'm always telling you, focus only the stocks generated in the most recent report. That means today whatever I am publishing, only those stocks near demand and supply zones. Which stocks? Not all the stocks, only high liquidity zones. Because we are focusing on high liquidity zones. Today, whatever the high liquidity zones we identified, only those stocks you have to refer in tomorrow's trading. I clearly told you. Even yesterday also I told you at 10 minutes 17 seconds. in yesterday's video. If you start listening from 10 minutes, 17 seconds for the next 2 minutes or 3 minutes, whatever I explained, you will get clarity. I clearly told you, do not take the trade. Let me open Astral. The mistake I think you made, you will understand. Yesterday, where prices are closed, look into yesterday's candle. The prices closed inside the zone. And the prices closed inside the zone are dangerous. I clearly told the algorithm is I developed stocks near demand and supply zones. Algorithm is developed based on the volatility. If we are looking without calculating based on the volatility, not only the stocks near demand and supply zones I am showing, you may get even more stocks. I am filtering majority of the stocks, not only based on the stocks near demand and supply zones, but also I am also validating the volatility in the market. The volatility condition should be satisfied. Only those stocks I am displaying to you, stocks near demand and supply zone. If I would not have added the volatility conditions in the algorithm, probably you may get some 20 stocks or 25 stocks or maybe 15 stocks every day. I mean high liquidity zones. Why I am filtering all those stocks before displaying to you? Those stocks that satisfies the volatility conditions, probably next day they will work. We have the higher chances. That's why we have more than 90% success rate. When you look into our fast data, even though I am claiming we will get 80% success, still it is proved more than 90% success rate. That is what we have seen from our first 100 HLQ trades. The Excel sheet I forwarded to you few days back. But what is the mistake you are doing? You are referring the report of the day before yesterday's report or even before that day report and even before that day report. If you are referring and if you are planning your trades, by the time volatility conditions might have been changed in that stock. When volatility conditions are changed, they have higher chances of getting a failure. What is it I told you yesterday? There is a higher success rate will be there for this zone because there is a rejection. That is one point I told you. And second point, what I told you, next time again prices go up and then come back. And when stocks near demand and supply near demand or supply zones, our algorithm identifies, at the time this zone will give success. That is what I told. And also I told you yesterday, do not take this trade tomorrow. Tomorrow means today. Yesterday I told you, do not take this trade for tomorrow. The reason is prices closed inside the zone. When prices closed inside the zone, the volatility conditions will be changed. Even though they have the higher success rate for this zone, but still we should not take trade. Why I told that point? Even though it is having higher success rate this zone, there is a possibility based on the price action close. But still volatility is not in our favor. That's why prices closed inside this. Assume today this zone is not violated. Assume. Today the prices moved up. Next time and again when prices come near to this zone, if our algorithm identifies, definitely this zone will get success. But today the situation is different. The volatility conditions of yesterday is different because the volatility conditions yesterday, what happened? The price closed inside the zone. But today easily it was broken. Why it is easily broken? Because of today's market conditions. That's why never take the zones where price closed inside the zone. We have to focus on the stocks which are near to the zone. How do you know the stocks near to the zone? Whatever the latest report we generated, that report always shows the stocks near the zone. You have to refer only those stocks. You have to plan your trades only in those stocks. Previously, I planned few stocks which was there in our even 1 or 2 days before zones. But I never took a trade when a price closes inside the zone. The price is closed outside the zone. I have measured the volatility conditions. I confirmed because I have that knowledge and experience. I know that the zone is going to work. So couple of trades I have selected like that. And I have demonstrated to you during our analysis discussion. But so far, I never shown you a single stock which is closed inside the zone in our analysis discussion. Because I know the zones which closed inside the zone is a dangerous. Next day, the market volatility conditions will definitely make you price go down. Maybe sometimes again prices will push you up. When prices push up, next time again prices are coming back, they will give you one more opportunity. That's why yesterday I clearly told you, don't take trade on this high liquidity zone. If at all, if anybody wants to take a trade in this zone, you should plan not according to the high liquidity zone. I told you, you have to plan as per your normal supply demand zone price action theory concept. What is the trend? What is the location? What is the odd enhancer scores? What is the price direction? All these points you have to consider, and then finally you should plan whether it is a suitable zone or not as per your normal supply demand zone price action. That is nowhere going to be in our discussions. Because normal price action, demand and supply zone, the success rate is like a 50% or maybe 60-40%. But we are looking for the zones having more than 80% success rate. That is high liquidity zones. The failure chances should be less. When failure chances will be less, if the stock is near the demand zone. But look into the yesterday's candle. The price is closed inside the zone. I never planned a trade when prices are inside the zone. Especially on daily high liquidity and 75 minutes high liquidity I am talking. But if you want to plan when prices closed inside the zone, and if you want to plan, you have to plan only as per your normal supply demand zone price action theory concepts. The pure theory, whatever the original theory is saying, you have to follow accordingly. See, please always remember, I will be the most happiest person only if you are planning your trades properly and getting success by using our high liquidity zones concepts. But if you are using in a wrong way high liquidity zones concepts, and if you are ignoring some concepts, and even you are clearly ignoring the concepts which I explained in our yesterday's video, clearly I told, don't take trade in this zone. What is it I told? This zone is get success, but not today. Prices should go up, again come back. At that time, this zone will have higher success. Without going up out of this zone, immediately if we take a trade, obviously it will fail. I clearly told, ignore this trade. Which trade? High liquidity zone trade. Always remember, high liquidity zones, you have to focus only from our most recent report. The reason is, in the most recent report, when I am finding the stocks near the zone, stocks near the demand and supply zones, I am measuring their volatility. Based on that, I am filtering the stocks. That means the volatility conditions of today should support the next trading day. Definitely, after one more day, that is from third day or fourth day. Today is the first day, tomorrow is the second day. Today we identified the stock near the zone, only tomorrow it is valid. After that, volatility conditions will change. Today's closing hour, we are measuring the volatility conditions when I am analyzing the stocks. When my software is analyzing the stocks. Today's closing hour volatility conditions will definitely match tomorrow opening condition. But the condition is stock should be near the zone, not inside the zone. That's why I'm displaying only the stocks near demand and supply zones. What are the volatility conditions? How they should be measured? Don't ask me all those questions. There are highly complicated things. They are beyond our understanding level. And moreover, they are at highly complex software algorithms level. But at least we have an advantage. We have a tool, software is available that is in a position to identify the stocks and able to list the stocks near demand and supply zones based on the volatility conditions. Not just near demand and supply zones I am not listing. If volatility conditions also satisfied, then only I am listing the stocks. I've been told this point several times earlier. And the one who made the mistake, because he didn't follow my video completely yesterday. If you would have followed at yesterday's video at timestamp 10 minutes 17 seconds, clearly I told, don't take this stock for your tomorrow's trade. Why I made that comment? And why you ignored that comment? Maybe you ignored that comment means you didn't listen the video completely. Why am I spending so much of effort every day? Not expecting you guys just fast forward the video and listen few points. I'm expecting you people to learn from my experience, from my knowledge. That way you will also think exactly the same way how I am thinking. Can't you spend 1 hour for learning the things in a better way? Why should I spend my time every day 1 hour for you for doing the analysis? I just generate the reports. Hardly it will take 5 to 10 minutes time for me to complete the software report and publish in the YouTube. But why I'm spending again another 40 minutes or 50 minutes extra time? Just because you will listen, you will learn, and you will also think exactly the same way how I am analyzing the stocks. I am expecting that you will also gain experience from my explanation. Whatever I am observing, every stock, everything I am analyzing during the analysis session. Expecting that you will also think in the same manner. And you will also analyze the stocks in the same manner. So that you will get better profits. See, what is the goal of this entire activity I am doing? The goal is you should analyze your stocks on your own. You should identify the right areas inside the zones. You should identify the right entry point, right stop loss, and right target. But if you skip the video and if you omit or if you ignore important points in that video, and whatever I tell don't do, and if you do that, and finally if your trade doesn't work, obviously you will be disappointed, and also you will make me disappointed. Because I want you people should get better profits. That's why I'm publishing the results every day. And if you are getting better profits, it is also an advantage to me. My software will also get a good name in the market. If you are successful, my software is also will prove based on your success. Its stability, the stability of my software depends on your success. So that is the reason why clearly you have to understand. You should not ignore the rules, whatever I am saying. You should strictly follow the rules. Sometimes when you are doing analysis, the reason is if prices go up again, come back, at the time you will be in a position to understand why this zone is going to be a successful. But always there are some conditions apply. What is the condition? When yesterday clearly I told, when prices enter into this zone and closed inside the zone, you should not take trade because volatility is changed. So this is the most important point you ignored. If you make a mistake in the analysis, that is a different thing. And if you ignore the most basic points, it is a, it is always a painful to listen. Painful because your trade is stopped out. Painful because my efforts are wasted. Whatever I told, you are not utilizing my efforts properly. Hope you are able to understand the my pain also. You should not create a feeling that why I should do so much analysis and so much of my time when you are not listening properly and when you are not following properly. Okay, now let us get into the next discussion, the analysis part. Analysis part today, all the zones are executed, prices entered. But we have only one trade is successful, remaining all the zones are stopped out. And out of remaining all, except one, remaining all we are able to identify, they are going to be failed. How we identified they are going to fail? Mostly you know the answers. In case if you might have ignored some points or if you did not understand certain points, probably in my analysis you will learn the things. Because multiple zones are violated and multiple zones are we are in a position to identify. Probably one or two points you will be learning new points today. And one zone is stopped out, which we did not expect. So obviously we have to accept because we have some failure rate. So far we have seen our failure rate is around 6% because failures are less. That is what you have to observe. So one failure happened today, we have to accept that failure. So let us analyze the stocks one by one. Okay, first one we will see the one that is got success, next the one that is failed. Both we will see, and after that remaining stocks, how we are able to identify their failure, we will discuss. The one which we got successful trade is on the Cholamandalam Finance. So I am opening the chart and this is the daily high liquidity zone. Inside we have 75 minutes high liquidity zone. Look into this 75-minute zone. So here we have a rally, 3 base candles and a drop candle with a hidden body. And this one we have fine tuned to 75 minutes time frame. Go to the 15 minutes time frame. Go to the 15 minutes time frame. And here we have a rally candle, 2 base candles and a drop candle with a gap. So there is a rejection just before this. That means there is a higher chances of hitting this zone, this 15-minute zone. And moreover, the risk is less. We can take, you may ask a question, can't we take a deep entry? Yes, you can plan that. But here there is a rejection. That means whenever there is a rejection, there are higher chances of just hitting this zone and again coming down. But you need to analyze the 5-minute zone to check the structure of the price candles. And look into the structure, price candle structure. We have a legging candle, 2 base candles and a drop candle. So that is the reason why we have an excellent structure. But the only thing this rejection indicated, there are higher chances of hitting this zone, and again prices will come back. That means we are looking for a type 2 15-minute zone entry because the risk is within our control. And look here, today at this 15 minutes candle, 9 o'clock 45 minutes, 15 minutes candle, prices entered into the zone and finally reached the fine-tuned the immediately available demand zone. We have a drop, base and drop. Previously also once prices reached this zone, this demand zone is holding the prices. There is one more demand zone below, but there is no guarantee that prices will reach. See, previously how it is holding, it is this 15 minutes demand zone is acting like a high liquidity zone. Okay, today it is violated, that is a different story. But earlier it has given multiple tests. So that is the reason why you have to keep your target till this demand zone only. And today prices reached this demand zone, and when it reached this demand zone, it has given 11,625 rupees profit. Sorry, 11,062 rupees profit, 62 rupees 50 paisa. 11,062 rupees, which is 7.07% return on the investment as per one future slot. If anybody would have waited for the next second level of the target, it would have given even more profit and more ROI. But we don't do like that. Because we never know how prices will be after it reached. Again, it might go up. And if you don't book your profit, and all your profit margins will be reduced. That's why we should be strict. We should not be very greedy about looking for. When prices reach this demand zone, again you feel, well, maybe prices again will go up to the next demand zone. But did they go? They didn't go. So never be greedy. We have to strictly follow our fundamental principles. This is what happened after that. By the time you would have booked our profit. So this is Cholamandalam Finance is a successful trade. And we have a failed trade today, stopped out trade, that is Tata Steel. One trade is stopped out today. Why Tata Steel is failed? Is any of our conditions are not satisfied? That is what you have to check. If you would have verified, you would not have taken a trade here. But here all the conditions looks normal. Definitely one would have planned a trade, but it is stopped out. If we know well in advance this zone is going to fail, we won't take trades in that stock. That we will see in the next examples, next charts. But Tata Steel is a genuine zone, but it is violated. We have to accept. And it is a 75-minute zone. So let us go to the 75 minutes time frame. It is a 75 minutes high liquidity zone. We have a rally base rally candle. And this 75 minutes you have to fine tune at 15 minutes level. We have identified two zones, 15-minute zones. Here we have one 15-minute zone like this. And this 15-minute zone, again you have to fine tune to 15 minutes level. So let me change the time to 5 minutes. 15 minutes we are fine tuned to 5 minutes. When we fine tune to the 5 minutes, what is that we identified? We identified a zone here. We have a rally candle, that is a leg-in candle, 3 base candles and leg out candle. So that's why what we did this 15-minute zone, because the rest of the places we didn't find any proper structure. That's why this is the way we planned our 5 minutes trade earlier. This is actually happened earlier. So earlier prices enter into this. This is a successful zone We identified previously, we took this trade. We know this is a successful trade because there was a rejection earlier before this zone. After that, prices went up. Next time, prices entered into this area, and it is a successful. And from here, it reached its 15 minutes target. But this is a different story. It happened in the past. Now today what happened? Today again prices entered into this. Because it is already a tested zone, today it is violated. It's been violated today. Okay. So this is unexpected. But what happened in below this zone, we identified one more zone, fresh zone. This time it is a fresh zone. So that means we are planning our trade in this zone, not the above. Because one above is already successful earlier. So here we have a 15-minute zone like this. And this 15-minute zone, again we fine-tuned at 5 minutes. First we need to see the structure of the candles. Is the structure of the candles are good? Yes, it is good. So here we identified a nice zone. And this way you can plan a trade. Here you have a small hidden body is there. If you add this entire thing is going to be a leg candle. That way it is and if you would have planned your trade like this, when by the time the prices reach, the stop loss is very small. But there are higher chances that the trade might be missed. So for that what I did, again I went to 15 minutes time frame. I kept the stop loss remains same only. Sorry. Here we have to look into this 75. So what I did again, I moved up. Don't want to miss the entry. So 15 minutes level. So I'm taking entry at 15 minutes level, but you can plan stop loss at this 15 minutes level, that is also possible. But planned a trade like this. Basically I increased the risk. Why I increased the risk? Because we can accept the risk up to 2% level. Just thinking, maybe we may miss an entry. But got an entry here. But immediately this entire zone is violated. So that way it has given 1,375 rupees loss, which is 1.02%. If anybody would have stick to the 5 minutes level, because most of the times we take 5 minutes, but this time why I have increased this risk is because already 5 minutes level the risk is too small. See here the risk is almost 50%. That means those who planned at 5 minutes level, you would have got a loss around 650 rupees or 670 rupees loss in this stock. Okay, for my point of view, if you ask me for my point of view, it doesn't make much difference for me whether it is 650 rupees loss or 1,375 rupees loss. 650 loss means probably it would have been a 0.5% negative ROI. But even after increasing this level, because I did like this, I planned my trade like this. So that's why risk is increased. The stop loss value is also 1,375. Anyway, it doesn't make any much difference with 500 rupees. But maybe for some people that makes a huge difference, saving even further 500 rupees. Okay, today it is stopped out. We are talking what would have happened if prices just touched this, whatever I fine tune that area and again move up. Those who minimized the risk, they might have felt, we missed the trade. So I don't want such kind of things to happen. If I would not have planned like this, we would not have got an entry in Cholamandalam Finance. Cholamandalam Finance, we planned at 15 minutes level, not at 5 minutes level, because there were some rejections earlier. So here also see there is a rejection just before this zone earlier. All these points will trigger maybe minimizing too much of the risk. I mean, minimizing the risk at the least level sometimes might be danger. What is the danger? It missed the entry. Already we are in a position to accept a risk at 2% level. But today, whatever I fine tuned is only at 1% level risk. But if you planned purely on the 5 minutes at type 2 entry, probably your loss would have been around some 650 or 670, between 650 and 70 rupees loss. But as per my trade plan, the loss is 1 lakh, sorry, not 1 lakh, it is 1375, which is 1.02%. Something what I planned, something like this. Let me go to 15 minutes time frame. Like this. This is what I planned. If you go to 5 minutes, the situation is like this. So what time it reached? Around 12:15. Around 12:15. But before 12:15, we got an entry in Cholamandalam Finance. That is at 9 o'clock 45 minutes. And reached the target at 1:30. This would have been your successful trade. Some people would have exited a little before. Why you will exit before? Because this ROI is more than 6%. It is almost 7% ROI. Because some people will stick to only 5% ROI. I know people who satisfy with, they won't trade beyond 5% ROI. They won't trade beyond 4% ROI. But we have confidence because our high liquidity zones reach at least up to the 15 minutes area most of the times. Okay, this is about two trades. One is successful and another one is stopped out. We have seen how much they have given ROI and negative ROI in both the trades. And now let us discuss the remaining four trades. The four more trades executed today, they were stopped out, but we know they are going to be stopped out. Let us find the reasons again one by one, even though some of the reasons you know. Maybe some things might have been observed today. Let us see. And escort is a daily high liquidity zone. We have a draw base rally. Previously we have fine tuned. We also got one successful trade earlier in this candle, probably on 6th November. We got this entry, stocks near the zone. And after that reached the 15 minutes target also. Probably it will be there, this trade will be there in our Excel sheet. So because this is already a tested zone, what you do? You don't plan a trade on this because once it is tested, unless it is a high liquidity zone, which one the 5 minutes or 15 minutes, otherwise you don't take second entry in that zone. That's why today this zone is failed. Then what about there is one more zone below? Why that is failed? Still we are saying that is not a valid zone. How we confirmed? Those scenarios we discuss. So for that you have to do top-down analysis at least starting from daily high liquidity, daily time frame. So from daily we go to the 15 minutes, we will go to the 15 minutes, sorry 75 minutes, not 15. We go to the 75 minutes. 75 minutes, how we identified the zone? Previously we have drawn a zone like this, a drop candle 1, 2, 3, 4, base candles. This is a leg out candle we considered. At the time we said this is not a great leg out, but it is a ERC candle. Why we have considered this is to fine tune at 15 minutes level. So we will go to the 15 minutes level. Inside that identified 75 minutes area, we have identified two zones. This is one zone because this is looking like a ERC candle for me. Drop, or if you don't accept this is ERC, still you have a drop, 3 base candles and a leg out, but fine tuned to type 2 proximal entry. Again further fine tuned to 5 minutes level. But this is already tested once, so today it is clearly violated. So we will delete this just to demonstrate to you why this area is deleted. And there is one more below. We have a drop, 2 base candles, and we have a leg out candle. And this one I fine tuned again at 5 minutes level to minimize the risk. Now look into this 5 minutes area. Why we didn't take a trade today? See, we have a ERC candle, failed ERC candle, leg in, we have a base candle, we have an excellent leg out candle, and a type 2 level we plan. Why we didn't take trade? Because it is already tested. All these are all rejections, but this is the real test. It is already tested. See, the moment it is tested, the prices went almost half of the zone. And moreover, this is almost at the low of this zone. Planning again second trade, third trade is a high risky. Unless there are other price action close. And again in this area, no more new zones are created. And all these things, all these rejections are with respect to the previous one, previous trade, the one we have taken. And because this zone is also already tested, we don't plan on this zone. And moreover, this 5 minute zone is not a high liquidity zone, it is a normal demand zone. See today what happened? And easily it is broken. Maybe there was small rejection, but that is not enough to push up to this. Why these rejections? Because people will place new orders by thinking this zone may work, whatever reasons. Always any demand zone, even if it is tested, at least some new orders will be there. That's why rejection just before the zone, from the proximal line of this zone. But today it is violated. Because they are the tested zones, we don't plan trades on the tested zones, especially at 5 minutes levels or 15 minutes level, unless they are again high liquidity zones. If they are high liquidity zones, at least one more test second or maybe maximum third time, we can plan. But not more than that on 5 minutes or 15 minutes level. So that's why we didn't plan any trade on escorts today. So finally the whole zone is violated. Okay, next one, India Mart. Why it is failed? So first let me go to the 75 minutes time frame. See, we have a drop, we have 3 base candles, and we have a leg out candle. So the reason why I didn't plan is this is already pierced. But why our yesterday's report demonstrated this, displayed this stock? Maybe some data error in my software regarding the yesterday's data. This is yesterday's, Monday's. Monday it happened. Maybe something might have been wrong in my data. That is what I'm predicting, but I have to analyze why my database is showing not shown this as a pierced zone. But anyway, when we looked into the trading view, it is pierced, so rejected this zone. Straightforward, it is rejected, and no trade plan for today. Because pierced zones we don't plan. See, because it is pierced, how easily the prices went down. So it's a straightforward. And the next one is polycap. So why it is failed? This is a high liquidity zone, already fine tuned. Previously we got an entry in this stock. The reason why it is failed, very simple. The reason, previously it is already tested. Actually, strictly speaking, just before, maybe few paisa, 5 paisa or 10 paisa before this prices, there was a rejection. Next time when we planned the trade, prices went almost deep inside. See, almost from the distal line of this fine tuned area, prices moved up. If you go to 15 minutes time frame, you will get better clarity. Let me show you on the 15 minutes time frame. See, we have a leg candle, we have one more ERC candle, because see the length of all these candles, they are same, and we have one more leg candle, it's considered as ERC. Now a base, and then we have a leg out. Okay, it's this leg out is not very great. Okay, after that follow through candle is also there. So that way we have drawn this 15 minute zone. It gave an entry. It's not exactly an entry, narrowly missed, but it is almost, because sometimes what we do, we place our orders at least one few rupees before this, because this is a 5,580 rupees stock. Definitely you will keep 5 to 6 rupees buffer you can add before this for taking the entry. These buffers are for taking the entry. Generally most of the times we use 0.01%. Is it 0.01 or 0.1%? 0.1%. Okay. That way we would have got an entry. But second time it went very deep. Once prices went very deep, see what happened? Easily it is violated. After that the whole zone is also violated, because there are no more fresh zones below this. Because all these candles are ERC candles. There is no base candles. That way we predicted this zone is also going to be violated today. Going to be violated means there are two reasons. Mostly they will violate unless institutions decide. What they do, they again create a fresh 15-minute zone inside this daily high, 75 minutes high liquidity zone, and then push the price up. That fresh 75-minute zone, again it will work, the fresh 15-minute zone, sorry, this is a 75 minutes HLQ zone. The fresh 15-minute zone, again it will work, next time again prices retrace back. But today institutions did not decide to create again a fresh 15-minute zone inside this. Because this entire day is a bearish day, they only created the supplies. Because we know this zone is going to be violated, it is violated. And what is the remaining stock? Yeah, there is one more. Because Tata Steel and Cholamandalam Finance we discussed. Cholamandalam is a successful trade. Tata Steel is a stopped out trade. And Havels. Why Havels is failed? See this 75. First let me show you. This is a 75-minute zone. We have a leg candle, a medium size leg candle, a base candle with hidden body, we have a drop candle. See, previously once it is tested this zone, but at the proximal line, proximal, at 75 minutes zone level, it is a successful. But how we do, we plan inside, we will draw a 15 minutes high liquidity zone. That way we take the trade. So where is the 15 minutes zone? So let's go to the 15 minutes time frame. See, we have a 15 minute zone here. Okay, a little higher, but why I'm marking you just to tell you what is the price action inside this zone at 5 minutes level. That is what you have to see. Why there is a success in this zone earlier? Because of professional gap. See, we have a drop. So within this gap area, just before entering into this 15 minutes, again there are pending orders pushed the price down. But professional gap area, institutions kept the orders. Always remember, the professional gap area, any orders are not visible to us. Always I say, professional gap area is like a black hole. We never know the price structure. We never know how many pending orders are there. Is it a weak pending orders or is it a strong pending orders? We won't be having any clues. At least candles are there. We will be in a position to judge. See here inside this zone there are candles. But how is the price structure inside this? So go to the 5 minutes, you get better clarity. So in that market area, the 15 minutes area, you observe the candles. All these are all 5 minutes candles. See how all these candles are there? Base candles. 1, 2, 3, 4, 5, 6, 7. Even if you want to consider this is a leg out, but this is not a great leg out, but after that follow through is there. Even if you consider like that, still there are 1, 2, 3, 4, 5, 6, 7. If you consider, actually this is also a base candle. Still if you want to consider this as a leg candle. When you have these many base candles, what will happen to that zone? Easily violated. That is what happened today. You may ask why previously it worked. Because there is a gap area, in that gap area pending orders are there. But the moment prices really entered into this zone structure is clearly known. See, all these are all traps, how institutions will try to trap us. Most of the time we don't bother about these price structures. That's why many zones will fail. That's why always I say, focus on price structures, focus on price structures. Why I am always focusing on that point? Because I know its importance. But with your experience, you will gain knowledge. But once you start focus on the price structures, you have to fine tune your mind. Your mind should think in different ways. Your mind should analyze the different things and try to learn on your own. You have to sharpen your mind. How I learned? Did anybody explain all these concepts? No. I myself found all these concepts. When a zone is going to fail, nobody taught me those concepts. But I found my own ways in identifying how a zone is going to be failed. Nobody has explained. I think none of you may not be knowing until you are listening my lessons. You may not be knowing when a zone will fail. We will not be in a position to tell 100% when a zone will fail. At least at 80% level, we are in a position to judge. See, today, out of 5 stocks, 4 stocks we have identified. When a zone is going to fail, only 1 stock we missed because the price structure is looking appropriate. Maybe there could be some reasons will be there. Maybe those reasons are beyond my current knowledge level. But when a zone fails, there is a reason. Okay, one ultimate reason is institutions would have cancelled the orders. At the time, price structures doesn't help us. We never know when institutions cancel the orders. Because today is such a bearish day, they might have cancelled the orders. That's why the zone is easily failed. Maybe that could be one reason. But such kind of reasons we cannot identify. So only in those situations only we should accept our stopped out orders. When you build your knowledge at that level, because institutions cancel their orders rarely, maybe very in a rare situations when there are strong reasons, at the time only they might cancel their pending orders. Maybe today is one such kind of situation for Tata Steel. So in such kind of situation, we have to accept the stopped out orders. But anyway, what we lost is very nominal amount. It could be between around 650 rupees to 1375 rupees. So because all these base candles are there, we know. See how easily the zone is broken today. The first candle, morning candle, 9:15 candle itself, it simply took off this entire zone. So that's why we are in a position to identify when a zone is failed. Because we know the reasons, we have already built the skill. Otherwise, if we would not have built this skill today, 5 stocks would have been stopped out today. Now, instead of 5 stocks, we are in a position to tell, oh, no, only one stock is stopped out. Remaining all are, we know the reasons. We know they are going to fail. How we are identifying? By doing top-down analysis from your high liquidity zone area onwards. Generally, people do top-down analysis at least from monthly time frame. But here, I am limiting myself to the high liquidity zone. Starting point is high liquidity zone. The reason is high liquidity zones, we don't bother about the trend, we don't bother about the location, we don't bother about the price direction. We just ignore. Our goal is, it is a high liquidity zone, it has to work, that's it. Mostly it is going to be successful, that is what we know. But what is the condition? The condition should be the stocks near high liquidity zones only. You have to apply these conditions. Because I've been measuring the volatility of the market or that particular stock at the time of generating the report. Those conditions will be applicable till tomorrow only. Tomorrow morning hour, at least we can say. Morning 1 hour or 2 hours or 3 hours maximum. Till that point of time. Because most of our intraday trades we complete during the first 3 hours. And 1 more hour maximum. Because we also seen some trades around 1 o'clock also. So that is the reason why, again, I am clearly telling you, please do not forget this point. Your focus should be only from the latest report. Do not refer the earlier reports because you haven't yet built your skill. What kind of stocks we need to consider from earlier reports? We don't have that skill. Why I'm saying you don't have the skill? Even I told you, clearly I told you yesterday, do not take Astral because price is closed inside the zone. You should not consider this stock for tomorrow. Clearly I told in my previous yesterday's report. Not to take this stock for your trade tomorrow, I clearly told. Tomorrow means today. Because yesterday I recorded that video. Clearly I told. At 10 minutes, 17 seconds I told. And even then what you did? Took the trade. Don't do such kind of mistakes. It's not only painful to you, it is also painful to me. Because I'm expecting all you people should get good success in your trading. If you are not in a, if you are making known mistakes, if it is an unknown mistake, yes, it is a good learning for us. Even by losing 1,000 rupees or 1,500 rupees, you got a very good learning. That is definitely going to help you in the coming days. And that is going to give you maybe another 8,000, 9,000 rupees profit during the intraday. You would have recovered your loss. But what is there in this to learn? What is the point you learned from your mistake? The only learning you learn is I have to listen my analysis video carefully. That is only your learning. Is it really experience? Whatever Pratap is telling, okay, I have to listen carefully. If you learn that point, do you think that is an experience? That is a basic thing. Never fast forward, especially when you are doing analysis part. How much time you are spending? Maximum my video will be there, analysis video, for 1 hour, not more than that. Maybe sometimes in a rare situations, maybe it could be a 1 hour 15 minutes or 1 hour 20 minutes. Spend that time. If you are not in a position to spend that time, how do you gain experience? I am trying to share my knowledge so that you will get faster experience from learning from my experience. See, to get a 2 years experience, you have to trade 2 years in the stock market. If I am sharing my experience, the same 2 year experience or the same 2 year knowledge, whatever you are going to get, you will get probably in next 6 months time period. Am I not saving 1.5 year of your time? Your experience, I'm trying to uplift your knowledge level. Instead, you spend, struggle a lot, lose a lot of money in the stock market, and finally you are learning what is right, what is wrong after 2 years. Same thing, if you listen every day 1 hour of my video, probably the same 2 year experience you will be in a position to gain in less than 6 months time period. Why every day I am recording the video for about 1 hour or approximately around that? So that you learn something, because why I am showing you analysis part? See, I can also show you this analysis part for today's identified zones, because I don't have the authorization to tell you what is the entry, what is the stop loss, what is the exit. So what I am doing, I have chosen a way. The way is after the trading, because the trade is completed. So I am trying to analyze the stocks. That way you will learn something. Same knowledge you apply for analyzing your own your own stocks from the recently generated reports. Hoping that you won't repeat these kind of mistakes again, because see, it is not only painful to you to listen such kind of things, it is also painful to me. Okay, now let us generate the demand and supply zones. So because I spent a lot of time today, I will quickly go through all the stocks near demand and supply zones, even daily also. Only near demand and supply zones I will generate. Let us start from yearly time frame. Entry time frame is yearly. Let us find the stocks near yearly demand zone. No zone is there. And yearly time frame, let us find any supply zones are there near yearly zone. No zones are there. And half yearly time frame, let us find stocks near half yearly demand zone. One stock is there. We've been seeing the same stock. Probably next few more weeks also you will see the same stock. And half yearly time frame, stocks near half yearly supply zone. Probably one stock is listed. Yes. So let's go back. Entry time frame is quarterly. Let us find stocks near quarterly demand zone. So one stock is identified. Let's go back. And quarterly supply zone, let us find near quarterly time frame, let us find near quarterly supply zone. No stocks are there. And next, monthly time frame, let us find stocks near monthly demand zone. So now 4 stocks are there near monthly demand zone. Let's go back. Monthly time frame, let us find the stocks near monthly supply zone. No stocks. Now weekly time frame, let us find near weekly demand zone. Now 11 stocks are near weekly demand zone. Let's go back. For weekly time frame, let us find the stocks near weekly supply zone. We have identified 3 stocks near weekly supply zone. Now let us generate for the daily time frame. daily time frame, let us find the stocks near daily demand zone. So 12 stocks are identified near daily demand zone, and the stocks high liquidity zones, high liquidity demand zones will identify. We have C4 is a fresh zone, and then we have Lalpat Lab, it is also a fresh zone, and then we have one more fresh zone UBL, and also we have one more fresh zone Wipro. So these are all the high liquidity zones identified, stocks near the demand zone. So let's go back. Entry time frame is a daily. Let us find the stocks near daily supply zone. So 9 stocks are filtered. Any high liquidity zones? So this is already pierced. Nifty consumer durables. Supply zones. No high liquidity supply zones on the daily time frame. Let's go back. Next 125 minutes time frame. Let us find the near 125 minutes demand zone stocks. So these 12 stocks are near 125 minutes demand zone. So let's go back. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes supply zone. So only one stock is near 125 minutes supply zone. Now let's go to 75 minutes time frame. Let us find the stocks near 75 minutes demand zone. 16 stocks are there near 75 minutes demand zone. Nifty Pharma is also near high liquidity zone. Now ABFRL. ABFRL is there with one more high liquidity zone, low on the curve, and the resistance zone is also high on the curve. That means the risk reward, yeah. So both high liquidity demand and supply zones are there. And Exide Industries, no, it is not high liquidity demand zone. We have to look for only demand zones. Yeah, Gujarat Gas Limited, this is also high liquidity, but it is pierced. So we don't look into this zone, pierced zone. And what else we have high liquidity zones? We have LTIM, L&T Mindtree. So this is also a high liquidity zone, a fresh zone. And we have M&M Finance. This is also a fresh zone, high liquidity zone. So all these are all 75 minutes high liquidity zones. So let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. No 75 minutes supply zones. And then we will generate 25 minutes time frame, stocks near 25 minutes demand zone. This is the filtered list for 25 minutes time frame, stocks near 25 minutes demand zone. Let's go back. Entry time frame is 25 minutes. Let us find the stocks near 25 minutes supply zone. So these three stocks are filtered. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes demand zone. 9 stocks are filtered near 15 minutes demand zone. So let's go back. For 15 minutes time frame, let us find the stocks near 15 minutes supply zone. 7 stocks are filtered. Let's go back. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes demand zone. So 11 stocks are filtered. Let's go back. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes supply zone. This is the filter list. I think around 17 stocks are filtered. Let me scroll down. So these are the stocks near demand and supply zone for all the time frames. So let us all meet again in our next video. Thank you.